And now some more developments from Asia. One of the few bright spots in China's slowing economy is beginning to lose its shine. After a post-pandemic travel boom, domestic tourism is now showing signs of fatigue, with hotels slashing prices as travelers become more cautious about spending. While people are still traveling, they are spending less, forcing hotels into an intense price war. China's domestic tourism industry is slowing down faster than expected after strong growth in the years immediately following the pandemic. Travel demand is cooling as consumers tighten their wallets amid a weaker economy and slower wage growth. Global hotel giant Hilton says its China business is feeling the impact. Revenue per available room, one of the hospitality industry's key performance indicators, fell 2.2% in the second quarter compared to a year ago. That's a sharp reversal from the 1.3% growth recorded in the first quarter. Hilton now expects revenue per available room in China to decline by low single digits this year, instead of remaining flat as previously forecast. Hotels across China are now competing aggressively on price. Industry-wide revenue per available room dropped 6% in July, according to Goldman Sachs, driven by a 3 percentage point fall in occupancy and a 1% decline in average room rates. For travelers, that means plenty of bargains. A weekend stay at a Hilton resort in Delhi costs around $173, but nearby hotels on travel platforms are available for as little as $50. Across popular tourist destinations, the median nightly hotel price is just $28 in Kashgar, $55 in Delhi, and $88 in Shanghai. Some luxury rooms still cost thousands of yuan, but affordable options are now widely available. The trend reflects a broader slowdown in consumer spending across China. Retail sales remain weak, inflation is subdued, and travel prices are also falling. In June alone, China's travel price index declined 0.6% from the previous month. With hotel rates and airfares both becoming cheaper, economists say that Chinese consumers are still traveling, but they are spending less per trip and looking harder for value. There is, however, one bright spot. International visitors are returning in large numbers, helped by China's expanded visa-free entry policies. Hyatt says visitors from the United States rose 18%, while arrivals from Europe increased 24% in the latest quarter. Its luxury hotels in China reported 11% growth, helping Greater China revenue per available room rise 7.2% on a year-on-year basis. But foreign visitors account for only about 12 to 13% of total tourism spending, meaning that they're unlikely to fully offset weaker domestic demand. For millions of Chinese consumers, travel isn't disappearing, it's becoming more price sensitive, and for hotels, the battle to attract those value-conscious travelers is increasingly turning into a race to offer the lowest price.